with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, inflation has eased in the US and Europe, setting the stage for policymakers to lower the interest rates in September. So how will this impact the global economy? And we'll also take a look at China-Africa trade ties. And now let's begin with our top story. Inflation has eased in the US and Europe, preparing policymakers to lower the interest rates later this month. During the first half of this year, the global economy experienced a modest growth and a sluggish recovery, with prospects remaining uncertain. So what is the outlook for the global economy? What kind of monetary policy is needed? And which countries and regions will be the engines to drive the world economy? For more on this, join us on the line now are Chen Jiahe, Chief Investment Officer at Novum Archi Technologies, and also Yan Liang, Professor of Economics, Willamette University. So I will start with you. The IMF says the global economy is set for modest growth over the next 2 years among cooling activity in the U.S., a bottom-up in Europe, and more substantial consumption and exports of China. So what do you make of it? For global economy, where are we now, and what are the big concerns among the world-leading economies?
Right. I think the IMF's statement and assessment of the global economy is on the right track. It is true that, the U.S. the second quarter growth was very strong, stronger than expected. The European economy finally have came out from a technical recession registered at the end of last year. And China's first half year growth has exceeded 5%. And as of August, I think, when it comes to the composite PMI data from both official and also from the Taixing, both show that the economy is in the expansionary zone. Even though the Taixing shows the manufacturing PMI is above 50, but the official is below 50. There are some headwinds in the Chinese economy, but I think so far, policy has been supportive, and we'll probably see, more policy support down the road. And I think those would help to buttress the economy. So overall, I think the global economy is looking positive. But that said, there are definitely concerns. And also, I think, some of the hidden or some of the potential headwinds. I think in the United States, we have started to see the labor market softened. For example, in August, the new job and also the overall job opening has been weaker than expected. Now is 7.91 million as of August, which is much lower than the expected 9 million total job openings in the US. And so there is still the question of how the soft landing may actually be achieved, right? With inflation declining and job market not cool down too significantly and drag the economy into recession. And I think same with Europe, even though inflation has gone down, but we are also seeing, manufacturing, industrial output growth has been very slow. So I think, the battle against inflation is not completely won yet, and policymakers still need to remain very vigilant when it comes to rate cuts and also stronger support for the economy to continue to recover and grow.
So Jiahe, where are we now for the global economy, and what signs or information can you see in the global economy right now?
Well, when we look at the global economy, if we look at what's going on in the United States and Europe, is that the inflation is now, as Yan just said, partly under control, but not contained yet. It's still a number that makes people feel not that comfortable, especially if you compare the inflation in United States and China. You can see that China has a very low inflation rate right now, but US inflation is not that low, but it's much lower than before. So it actually gives a chance for the Fed to reduce the interest rate, because the interest rate is actually too high for the US economy and the global economy. So I think they have to reduce the interest rate, even though the inflation is not as low as people might want. Say, it's a very healthy rate if it's between 1 to 2%. 4%, but now it's somewhere around 3%. So that's still a bit high. But I think they can lower the rate in order to stimulate the economy. And if the rate is reduced in the United States as well as Europe, then the global economy will receive a stimulus because lower interest rate, stimulates investment and consumption. It's never considered as a good thing for the inflation rate to be high or the interest rate to be high. I mean, if the interest rate is high, it's really killing the economy because people don't want to consume and they don't want to invest. Everybody is buying the bonds. Actually, I listened to some talks of U.S. investors. They've been talking about stocks, saying that, okay, this is 25, 30 times P ratio. It's not that expensive. It's not that cheap. So how would you decide? And one of the investors just said, I would buy the bonds because the bonds are offering much higher return, especially the short-term bonds. So why not just buy them? So I just forget the stock. So that's a small story telling you that if the interest rate is too high, then people don't invest.
And Jiahe, you are a market player, so we've seen the share prices in the U.S. and Asia markets have tumbled recently. So how do you explain that?
Well, we have seen that the U.S. market has been leading the tumbling, especially the large tech companies in Nasdaq market, and that later on resulted in the dropping of shares in like Japan or South Korea. And I think that's basically because the US market has been rising for too long a period of time. People paid too high an inflation for large companies, especially like high-tech companies, AI companies, computer chip companies, these kind of companies. And we have seen people like Warren Buffett, they started selling shares like in the stocks of Apple, as Buffett has been selling these days. And if you compare the valuation of Apple to some of the leading high-tech companies, you can find that Apple is still at a relatively cheaper valuation, but that also resulted in the selling of Warren Buffett because it felt it's expensive and it's actually accumulating a lot of cash. So that's basically speaking, if you have a bull market that has been too long, and the rising of the valuation has not been offset by the rising of profit or book value or dividend, or at least not fully offset by the rising of fundamentals, then you will have a sell of one day or another. So we are just saying this sell right now.
So according to the IMF, China is projected to be the world's economic champion for the next 5 years. And it says China will continue to be the engine of the global economy. So how do you read China's economy right now?
Right. So first of all, let me make a quick correction. I should say that the job openings in July in the US is actually 7.67 million. So again, the job market seems to soften. I would just add one more thing about the Nvidia and all these other companies that we see. The stock has been pretty volatile these days. And I think that reminds me also last month, right, in August, that because of the carry trade reversal, also because, some would call the technical corrections to these tech companies is overvalued the stock prices. We're also seeing, Nvidia right now is under the DOJ, the Department of Justice's subpoena in some of the antitrust probe. So I think that also in some ways spook investors, especially when it comes to, AI and tech related stocks. So I think I just want to echo this idea that the volatility, right, in the stock market, so that could be a potential risk for the economy. Now, for China, I think if the reading is relatively mixed. So, for example, when we look at the August number, we have seen, the industrial output growth continues on, even though the official PMI for manufacturing, now dipped into the contractionary zone. But the Caixin manufacturing, PMI stays positive. And so I think, again, I think that industrial production in China will remain resilient. And, that is going to be continuously boosted by both domestic demand, because we know, for example, the government has supporting some of the trading programs for automobiles that has increased the EV sales by 680,000 units. The state owned enterprises and other enterprises are also engaging in this equipment upgrade programs that they expect to, upgrade, $414 billion worth of equipment in the next 5 years. So I think there are various, policies that would help to bolster the internal demand. And external demand has been strong, right? In July, we have seen the export growth has gone up by 7%. So I think in that sense, these are positive signs. I think that is going to be moderate, recovery and moderate growth, which is still, making that 5%, around 5% growth target within the range of reach.
So, Jiahe, so the PMI figure for the Chinese high-tech manufacturing sector increased to, more than 51 last month. When we discuss China's high-tech manufacturing, we must mention Huawei. This company reported a 34% jump in revenue for the first half of this year. And we know that its smartphone sales are robust and its smart car solution business is well despite the U.S. sanctions. So how did the company make it?
Well, I think Huawei is a very good example about the potential of China's economy and China's companies. I mean, the U.S. government has been posing a lot of pressure onto Huawei in the past many years. It's a huge amount of pressure put on Huawei as a single company. But this company grew out, and that's basically because of a few things. First of all, they are having a lot of very good engineers that the China's education system has provided. I mean, if you look at the global universities, education systems, and China's educating of its own engineers is one of the best in the world. It's comparable to economies like United States, Western Europe, Japan, etc. So consider the fact that China has the largest population among these economies, 1.4 billion people. So the engineers of this country is actually the best of the world. So these people actually formed the high-tech companies and high-tech industries in China. And that's one of the very important reasons why Huawei has been successful, as well as many high-tech companies in China, like BYD, Dajiang, etc. So you see all these companies growing out these years. And the second is that China has a large economy and a large consumption market backing these companies, because if they got sanctions from the United States, that's fine, because the US has like 300 million people, then you lose that market, but you have 1.4 billion people here. This market it will not lose. So that's a very important thing. I mean, that's why when we see that the United States hit the Japanese companies back in the 1970s and 1980s, many Japanese companies has been hit very hard. That's basically because the Japanese economy and the population is much smaller compared with what China is having right now. But if you look at the US hitting of companies like Huawei, China has a population that's about somewhere between 10 to 15 times of Japan. So that's a very large market. Then this market is supporting these companies as well. So that's another reason why this company and many other high-tech companies in China has been successful in these years.
In a broader picture, Yan, the central banks in the US and Europe are prepared to cut the interest rates this month. So what does that mean for global markets and the capital flow?
Right. So I think rate cuts in both the US and Europe are really projected to take place as early as September in the US and also Europe. So I think what this would help is that it helps to reduce, some the carry trade that I just mentioned earlier. In other words, the interest rate differentials is not going to be that great that all the, capital flows back to the United States and investors borrow low in Japan and invest in the US with the high, yield on their fixed income instruments and so on and so forth. So I think that would help to level the playing field a little bit and help to reduce the cost of capital outside of the US and outside of Europe. And I think also that in some ways would be helpful for their economy because, as I mentioned earlier, they're still having some of the headwinds as their labor market softened. And I think for China, I didn't really answer the question about China's role. I think it's really important because IMF and World Bank, they projected the global growth it's about 2.93%, and because China's economic size is about 18% of the global GDP. So if China does achieve that 5% growth, that would contribute 30% of the global growth. So I think that it's very important. And I think with a lower rate in these Western countries, it also helps a lot of emerging countries, China included, because in that way, China would not worry too much about the currency depreciation, right? If the U.S. interest rates high, that could strengthen the dollar vis-a-vis the yuan. So there's always a defensive, sort of mode for China to keep its currency and also keeps interest rates. So I think rate cuts in these Western countries would help to alleviate some of those pressures, right, for other emerging markets to keep their rates high and to defend their currency values. And I think that would also helpful for some countries that have large amount of dollar-denominated debt, because that would mean, their interest payment will be lowered and the currency would be gaining more value. And all of this will help to alleviate their debt burden.
So Jiahe, so the IMF says AI, or the artificial intelligence, is the promise for the global economy. They say AI is our best chance because over time it can produce a sustained surge in productivity. So what are your thoughts?
I think IMF has been making a very correct statement. If you look at how much AI can help people a lot in our economies, what we can find is that the potential of these high-tech stuff, the AI stuff, is just being unleashed right now. We're probably standing at a gate of next few decades about economic growth that will be brought because we use more and more artificial intelligence in our economy. Mm-hmm. So we are right now. We just opened this toolbox and we are gradually developing useful tools in our lives. And this is what's going on in the economy. I mean, if you look at the Industrial Revolution, started hundreds of years ago, and we are still inventing new machines every day right now. And you see, after hundreds of years, we're still making progress with the machines, the Industrial Revolution, all these kind of things. So if you look at AI, yes, we will have more and more useful tools with the artificial intelligence, with high-tech stuff. And the very important thing is that they are energy friendly if you compare that with the traditional industries, which consume a lot of coal, oil, and electricity. But the good AI system would be energy saving, I would say. But currently, we're having a lot of AI systems that really cost a lot of energy, saying that we even saw some surge in the electrical stocks in the stock market, saying that because AI will cost more energy and more electricity in the future, so we have to build more power plants. That's wrong, because I don't really think that if an AI system costs a huge amount of electricity, then that's definitely not a good program. You can have some way of reducing the size of the program and making it more efficient. Mm-hmm. So that's why I say that we are at a very early stage of AI development. We're still using this program that costs a huge amount of electricity. That's not right. So yes, but we have a long way to go.
So yeah, what's your thoughts? Is AI the promise for the global economy?
I do think that AI holds the potential of boosting productivity, but at the same time, I think any technology could be a double-edged sword. AI, for example, is projected to affect 60% of jobs in advanced countries and 40% in developing countries, according to the IMF. So what that means is that, these AI technologies could compete, right, for jobs for some workers. And so I think, to protect these workers from AI, competing away the jobs, we definitely need, skill upgrading. We also need to try ways to reduce that kind of technological inequality within the country and also across countries. Also, I agree with, what Jiahe has talked about. AI right now is very energy intensive, and we need to find ways to economize and reduce the drag on the resources uses.
Mm-hmm. Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, and Chen Jiahe, Chief Investment Officer at Novum Archi Technologies. And after a short break, we'll look at China-Africa trade ties. Stay with us. You're listening to Biz Today. I'm Zhao Yang in Beijing. The Forum on China-Africa Cooperation Summit was held from Wednesday to Friday in Beijing. China has been Africa's #1 trading partner for 15 consecutive years, and bilateral trade has maintained strong growth this year, despite weakening global demand. For more on China's trade and economic cooperation with Africa, I spoke with Dr. Zhou Mi, Senior Research Fellow at the Chinese Academy of International Trade and Economic Cooperation. Well, Dr. Zhou, thank you very much for joining us. First, the trade between China and Africa has nearly tripled over the past 15 years, growing from $100 billion to $282 billion last year. So what do you make of it? And how do all this trade and investment benefit the African countries?
Yeah, it is not an easy, task to be fulfilled, especially when we're talking about the trade volume. Actually, in the past, we see that many years ago, we still see, some of the multinational companies from the Europe, from United States, they have imported too many materials from African countries, but in very low prices. So when we're talking about the trade value between China and African countries, I think that it is different. We're not only trying to get the materials and some of the other resources from Africa, but trying to give them our kind of very good prices. And that is very important for them to have a better income to support their social development and also to benefit the people. Well, another field I want to say is about what we have helped African countries to develop their abilities in the global value chains. We know that for the industrial improvement, I think many of the countries want to industrialize their economy, but for some reasons, I don't think that African countries has benefited a lot from the improvement in the global value chains. So in the past, 15 years or even longer, I think many of the Chinese companies are helping the African counterparts to improve their abilities for manufacturing, for better processing of their raw materials, the agricultural products. Is a really important one. And the third one, I would say that is, the trade also coming from the export from China. Some of the export from China are mainly on the machineries, on the electronic machineries, which is very important to support the African countries to improve their abilities in processing and also equipment. So I mean, that is a kind of integration and the win-win cooperation between our two sides. We are, benefit both by our two sides.
And why does the West accuse China of the so-called debt trapping Africa? And what is the current state of China-Africa relations?
Yeah, actually, I think that one of the reasons maybe come from, the better and more integrated cooperation between our two sides, between China and African countries. We know that China's, some of the Chinese banks are really working very hard to help the African countries to urbanize their economy and society and trying to industrialize their, economy. So in this regard, I think that some of these Chinese financial banks have given many support to those African countries. But it's not about the debt, traps. It's actually are based on some kind of a calculation and also, trying to support their abilities to have a better abilities to be involved in the global value chains. So I think that maybe some of these Western media just read some single numbers and they said that, the financial cooperation between China and African countries have exceeded the World Bank and IMF. They may worry about that, but I don't think that would be necessary because this kind of cooperation are based on the carefully design about what we can do and trying to calculate the abilities of sustainability. And we are helping the African countries to improve their infrastructure, the lot of societies, conditions, which is very important for the people. It's not only for the government.
And how do you see the synergies between the Belt and Road Initiative and the African Continental Free Trade Area? What can these synergies bring for Africa's trade and economic development?
Yeah, there are some differences and some similarities. For the differences, I would say that free trade agreement is a bonded, commitment by the related stakeholders. They promise that, and they will give some preferential, like for the tariffs, for the market access. But for the Belt and Road Initiative, it's voluntarily kind of consensus on the ways we are going to do. So they are maybe not the same, but they also have some similarities. So both of these FTA and Belt and Road initiatives are really helpful for us, for the developing countries to benefit by the cooperation. And that is very important when we are going to deal with many challenges.
And Dr. Zhou, so why do you think is the growth rate of China-Africa trade and investment far exceeding the world average?
first of all, because our two sides have a very long history of cooperation, we trust each other. So it's very important because we helped each other not only just from China's side, and African countries also help the Chinese economies and also to regain our status in the United Nations. I think it's very important for us to remember that. And the second is that we have a very complementary, the infrastructure, resources, and market and technology. So we were trying to do something vertically in the supply chain and the industrial chain. We were not just trying to compete with each other. And the third one, I think that will become because that China's have gained some of the experiences on the poverty reductions and also a better urbanization. So African countries think that they can learn something from China. So and the Chinese government really want to share our experiences with them. So we have some capacities buildings and also helping those officials of African countries to benefit from that. So that are the basis for the better cooperation, and the enterprises also believe that.
And in the upcoming cooperation between China and Africa, so which industries can offer opportunities for private enterprises?
I think that for both from the old one and the new one. For the old one, I mean that is something we have many years of cooperation, like for the manufacturing, agriculture, processing, because we know that it is important for us to improve African countries' local abilities to dealing with their resources in a better value-added products. And the new one is about the the NEVs, the new energy vehicles, and also the solar panels and other related areas, and also something to do with the digital economies. I think that from both the old one and the new one, the enterprises are really active. They believe that the cooperation between Chinese and African governments are really helping them to have a stable environment for investment and trade. So they were trying to maximize, the opportunities and trying to give their own suggestions. So, in this forum, the enterprises also are involved. They are able to provide some of their suggestions and trying to find out the better ways for dealing with the situation and cooperate and benefit both sides.
That was Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation. And with that, we end this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.